Afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin Show. Hope you had a great trading day out there. Some decent moves. This about face in the equity market was pretty awesome. We had some nice negative moves, and then all of a sudden it ripped up to closing, we'll just say almost positive. And of course, crypto right now, actually this moment, is falling apart. I got executed on something probably about 10 minutes ago as I'm buying some more on this little sell-off here. So hello everybody, good to see you. John and Les, Eric, Lori, Chris, good to see you, my friend. Happy Little Friday. Yes, no drink for me today other than a little bit of hydration, but we'll have a nice cold alcoholic beverage tomorrow. Siraj, Tony, good to see you as well. Yes, cheers and happy money to everybody. Yeah. Tom Messina, Margaret, Big Eb, good to have the regulars here. All right. Today's show, I'm going to talk about something it's really no stranger to the financial markets. It's the backbone for how most of the online financial firms came to prominence and how they continue to prosper for the last 20 plus years, and that is payment for order flow. Now, the reason that this is so interesting is because right now the chairman of the SEC has got a little hair up his backside to address a bunch of things, really. Number one is payment for order flow. Another one is stable coins and regulation of cryptocurrencies. Another one is consumer protection. So he's got a lot of things on his plate, but it always seems like every SEC person, when they get in there, they want to have some legacy piece to walk away with, and payment for order flow may be one of those. Now, I saw at the end of yesterday's show, there were questions that came in the chat saying, what's payment for order flow? So I'm going to go over that as well as answer the question that came in from Chris, which is, will the stop for payment of order flow kill the market? All right, well, I think that would probably be a little bit of a stretch. Markets never get killed. Markets just maybe suffer some injuries, they adapt, and they move forward and learn from those injuries. So the way that I see this is, and I've mentioned this before, if you're using somebody like Robinhood, your orders are being sold to somebody else. And if your orders are being sold, that means that you are the product. You are no longer the customer. They're basically allowing you to use their information, their access to the market, and then they sell your order flow to somebody else. Now, you may be thinking, well, damn Robinhood, darn those guys, and wag your finger and saying how evil they are. This is common practice, folks. The big names out there, Ameritrade, Charles Schwab, E-Trade, Webull, TradeStation, Ally Financial, these are just an example of a few of them that are selling order flow. And it's challenging for me because when I started, I was always under this umbrella of belief of efficient market theory, right? Efficient market theory states that markets function because we all have access to the same information at the same time. And if you understand what payment for order flow means, it really means that people have a huge competitive advantage. For example, let's say that you and I somehow had access to Goldman Sachs' order book, and you could see their traders putting in orders to buy 500,000 shares of a stock, and we saw it before it hit the market. What do you think we could do with that? Well, I can tell you one for sure. If I had that information and I had capital, if I saw Goldman Sachs buying 500,000 shares of any security, I'm going to jump right in front of him, right? I'll be right in front of that guy because I know his orders backing me up, going to push that price higher, and I can also see when he's about to be finished with his orders, right, getting filled, and I can jump ship just before he pulls the plug and backs away. It's called front running of order flow. Now, for some reason, it's illegal for you and I to do that, but it's not that illegal. Technically, it is, but apparently these firms get away with it, and I think that's what Gensler's complaint is, that it does a disservice to the retail investor. Now, before you start throwing eggs at me, well, go ahead and throw eggs. It's at your computer monitor, so it's okay. But if you throw eggs at me here, understand that payment for order flow isn't always bad. In some cases, you can actually get price improvement, but let's be honest, it's kind of like going to the grocery store and saying, I've got $1, and you know your soda costs $1. How often is it 99 cents? Very rarely. Most of the time, it's going to be a little bit higher than you thought. So you don't always get price improvement, but you can. So if you're a Robinhood trader, here's what happens. You go to their platform, and whether you do a limit or market order does not matter. When I was tracking it back in the late 90s, if you did a market order, the person who was buying the orders from you would actually pay more for that. So it's don't worry, we're going over it, Lisa. Right now we're doing what payment for order flow is. So if you buy 100 shares with Robinhood, so you buy 100 shares of pick any stock, doesn't matter, and you say, I want to buy 100 shares of this security. Robinhood will sell that order flow to a firm, somebody else. It could be Virtu, that's one of the main ones out there that's publicly traded. Could be Citadel Financial Markets, could be Global Execution Brokers. These are three of the big names out there that buy order flow. Now, how much are they paying? Well, for every 100 shares, and this is disclosed, documented information, for every 100 shares, Robinhood earns about 17 cents. So it's not like they're making huge money, but remember, they're dealing with sheer volume, and we're dealing with hundreds of millions of shares traded. Now, that starts to add up, and if every time you let somebody use your facilities and trade 100 shares, you're getting 17 cents, well, on 1,000 shares, that's $1.70. A lot of times these people are buying penny stocks, right? And they're buying 100,000 shares at a time. Well, now that's 1,700, that's 100 and... Let's see, we go from 17 cents to $1.70. That would be 1,000 shares. 10,000 shares would be $17. Yeah. So you can see how it just starts to add up real quick. Citadel, right? Chump change. Small fish out there. Hey, I tell you what, if I'm in a financial fist fight, I don't want to be going up against Citadel. They got way more capital than I'll ever have. So, you can't mess with these guys. So what I thought might be kind of interesting, and to answer your question, Chris, no, they won't kill the market. But does this present an opportunity? If the writing is on the wall that Gensler is going to repeal and make it illegal to do payment for order flow, there are certain businesses out there that will literally die. Robinhood being the key one, right? If you look at Robinhood's financials, the vast majority of their money comes from payment of order flow. There's a lot of others. Ameritrade is probably, they make the most off of payment for order flow, but they have a bunch of different, we'll just say business arms that they might be able to rely on, and that might save them. You have E-Trade, right? E-Trade is another major firm that gets payment for order flow. Will they die on the vine? Well, remember, E-Trade is not standalone anymore. E-Trade was purchased by Morgan Stanley, I think in 2020. So, they're on the books of Morgan Stanley, and now that'll just be a line item adjustment on Morgan Stanley's books. Who cares? Wash it off. But could we look at somebody like, I don't know, Robinhood, as a potential short opportunity? I think you have a really good argument for shorting that. Now, let me show you here real quick the financials behind this. I want you to see some of the numbers. So here is the payment for order flow pieces for Charles Schwab, Robinhood, E-Trade, and Ameritrade, some of the biggest ones out there. We'll talk about exactly how much money they make on the payment for order flow, but I wanted to highlight this right here. In the red columns, you can see how much money they are receiving for payment of order flow. Now, Robinhood seems to be making the most. They really are doing great on equity shares. I don't know who they sell to. But as of Q2 of 2020, so yes, I'm a year behind. I don't have the current information. They were doing 17 cents for equity trades, 58 cents for options trades, which basically came out to about 30 cents per 100 shares on Robinhood. You can see that Charles Schwab was doing about 18 cents. Here, let me bring up the wonderful pen. I know you guys hate my drawings. But so there's, encircling now, Robinhood. There's their total for the two. You have Charles Schwab doing about 18 cents per gain on options and equity combined. Same thing for E-Trade. And then down here at the bottom, you've got a pretty nice number coming out for Ameritrade, which is 25 cents. Exactly, Brendan. And this is something we talk about, decentralized markets and browsers like Brave, where I can be using someone else's browser and not have my data sold, right? It's one of the things that irritates me about Google and Facebook, because they're taking our data and selling it. Robinhood is no different. Robinhood is taking your transactions and selling them. Now, the question that came in from here from Margaret says, does it really benefit the retail trader? Well, that's a tough question. I would say, personally, no. It doesn't benefit the retail trader. It benefits the retail trader on the front page. And what I mean by that is the front page is your transactions are free. Wow, that's great. Your transactions are free. Wait, yay, okay, cool. However, when you look to page 2 or 3 or 4 and start looking through the fine print, your transactions don't cost you anything out of monetary expense out of your pocket. Where they are costing the retail trader is the form of slippage and potentially having the firms like Virtue, Citadel, and global execution brokers trading against your trade because they know that most of the time retail traders are wrong and they can push it one way or another. Or to make it even better, if you're doing a market order and that institution buys your order flow and you're looking and saying, okay, I did a market order, I should be able to buy it at $20, right? All of a sudden you got filled at $20.03. And you're like, what? That's weird. It's only 3 cents. Yeah, but you bought 1,000 shares. That's an extra $30. By knowing if we have direct access and going straight to an exchange, you can pinpoint the individual in the market where you decide to trade through. So to me, that's a way better way to go. But a lot of the retail people who start off don't quite understand how they're being used or manipulated. If they're giving you free commissions, it's costing you somewhere else. I'd rather pay a commission because I know exactly what I'm paying for. If you aren't paying a commission and your transactions are free, you don't know what's happening behind the scenes and you're getting screwed, honestly. So we'll continue to dig through this one. I just wanted to show you this to show you their their rates. But here's where it gets really interesting. You want to talk about big money. This isn't like, oh, a few $100,000. Here is a brokerage table that kind of breaks down by size who's the biggest. So you can see number one up there at the top, TD Ameritrade, right? TD Ameritrade right there. In 2020, made about $1.15 billion off of order flow. So if this was beneficial for you, how did they make $1.15 billion off of selling orders? I mean, that's crazy amounts of money. It makes you wonder, like, why don't we just start a trading firm, right? You just start a trading firm, you sell your order flow to somebody else, and all you have to do is get volume, get more people in there, convince people through clever marketing and advertisements that your platform is free. We're going to stick it to the man. Well, the irony is, Robinhood's whole gimmick is we're sticking it to the man. Power to the little people, right? I'm Robinhood. Yeah, I'm going to steal from the rich, give to the poor. Well, essentially what you're doing is you're making the poor seem like you're a good person, and then you're letting the rich steal from the poor again. So Robinhood's motto definitely needs to be changed. However, you see the numbers here. I wanted to bring up these because you'll notice a pretty interesting thing. And I'll go from Q1. I'm going to do the Robinhood line item here just so we can get Robinhood identified, because I think that's where to me, that's where the biggest opportunity is going to be. So here's Robinhood right here. Notice that from Q1 to Q2 of last year, so I'm on Q1 right now, Q2 doubled, a 100% gain. Then things slowed down a lot, and that's, I think, when they started getting attention about their payment for order flow. And you can see they were still making $220 million in the quarter. That's incredible. Which one, Lisa? You want to see this? Here they go. So this is this is from Piper Sandler and SEC filings on the different fee structures. So grab a quick shot of that, Margaret. I'm going to move on. Here is the part that I think is most interesting. So last year, these so Ameritrade, Robinhood, E-Trade, Charles Schwab, Webull, TradeStation, and Ally Invest, those collectively on sale of order flow made $2.6 billion. Interesting. Now, we look at Q1 of 2021, Robinhood is still accelerating, right? They went from Q4 of 2020, they had 221 million. So they jumped by about another 110 million. And here's where it gets interesting. All of a sudden, Q2 for everybody showed a big slowdown. It was a dramatic drop. I know my lines are so straight. Try drawing with the mouse, everybody. Dramatic decline in revenue. Now, the numbers I'm hearing right now show that things are actually picking up significantly for Robinhood over the last couple of weeks. So still, they've already made $547 million in payment of order flow. To me, yeah, we all are, right? We're in the wrong business. What about direct trades like Arca, Bats, XNS, Yes, and others? Is there order flow involved in those as well? No, those are you could call them liquidity pools, not dark pools per se. They're basically exchange traded network ECNs, exchange traded networks. Some of them, like Arca, are their own exchanges, but that's not including in this sale of order flow. So sometimes if I'm directing orders, I could choose Arca or Arca X. I could go through these different order routes or like Bats and say that's where I want my orders to go. That's not included in these fees. Those are separate exchanges. This is literally a company that really doesn't do anything except allow you to look at a bunch of quotes and then send your orders straight to somebody else and get paid for it. So, the man wants to keep us down. Well, no, the man doesn't want to keep you down. The man wants to make money at all costs, right? If that means that you get to rise and they make money, cool. If you stay in poverty and stay down there at the little in the weeds and they make money, cool. As long as they're making as much as they can, they're happy. And it's kind of a sad way to view it, but that's to me kind of what payment for order flow represents. So thought that would be interesting just to show you the numbers. Now let me show you some charts here to maybe dive a little bit deeper. So some of these are publicly traded. So you have Ameritrade. So you have AMTD. Oh, that's right. Ameritrade got bought. So we got Charles Schwab, SCHW. So there's Charles Schwab, and you could see from that list that they actually did have a significant amount of payment for order flow. They made $245 million last year, already at 139. Charles Schwab has their arms in a lot of different businesses. So do I think that Schwab could get hit hard? I think it could get hit. I don't think it would be the end of the world. We could look at their balance sheets, and their numbers don't necessarily come off of payment for order flow. They come off of interest earned off of deposits and assets under management. That was where their big chunk was. Ameritrade, you've got E-Trade. Webull is not publicly traded. You could look at TradeStation, which is a company called Monex. That's MNXBF. Right? So this is Monex. I wouldn't touch it. I don't think this is a diversified Japanese company, so I pretty much would say leave it alone. You do have Ally. Remember, Ally is not just trading, it's also a bank, so I don't think they're going to get hit that hard. If I had one target in the entire space, it'd be Harry Hood. Oh, my fishness just stuck with me. It's a fish song that's called Harry Hood. I would think that Robinhood is probably the best option here to go short, because if you look at their earnings, they are pretty much payment for order flow. And without payment for order flow, they're dead in the water. They'll just collapse. And yes, they could reinvent themselves, but they'll no longer be worth $40. Those numbers aren't going to continue to rise as they have. So to me, if this does go through, and if we continue to see pressure from Gensler and regulators, which I think I think it could change. I think that Gensler will want a statement piece for his campaign and for his legacy as SEC chairman. Why not? Go for it. It's been in place as long as I can remember. I've known about it forever, payment for order flow. I've been a victim of it on a dramatic scale multiple times back in the late 90s because the spreads were really wide. Schwab used to manage our portfolio until I found out. Good, Lori. Well, look, let's not throw stones at Charles Schwab. They just found a business option. And you got to put yourselves in Robinhood's case or Schwab or any of these companies I just mentioned. I don't want to vilify them. The only one I really just don't like is Robinhood, period. I just think that they're making it way too much of a gimmick. Oh, yeah, we're sticking it to the man. I think they're screwing their own customers. You look at something like Charles Schwab. Charles Schwab does provide some great service to their customers, right? At a certain point, we have to figure out how much time and effort do I want to manage my personal finances? I want to manage my 401k and trading and all that. Do I really want to do that? If not, I'll go with a financial advisor or somebody who knows what they're doing. Charles Schwab has some great tools for you. They have some good advisors. There's some great people working there, but they're going to charge you for all that stuff. If you look at the cost that it would take for you to set up your own exchange connections and get directly to an exchange and offer direct access, it's cost prohibitive. Not only is it cost prohibitive, meaning it costs you a ton of money, but there's also a lot of different rules and regulations you have to follow. It's like all these headaches at these firms, but you know what? It's so much easier for us just to take an order and send it off to somebody else, as opposed to us filling that order through our connection. So I can't fault them. I can't fault them for this because they basically just said it's not worth the effort for us to build all that infrastructure. And I might have done the exact same thing. If I knew I could, if I went directly to the exchange, and here's your gimmick. If I went directly to the exchange and had all my connections, I would not be allowed to give you free execution. I have to make money somewhere. I'd have to charge money per execution. So if I set up all my own infrastructure, I have to charge you commission. You're most likely going to go somewhere else, even if that commission is cheaper than the slippage that you'd be paying on Robinhood for sale of order flow. So I create this persona that I am going to give it all to you for free. And now you're like, the consumer, the end user falls for this hook, line, and sinker. They're all happy. And next thing you know, they think that we're the greatest thing since sliced bread. And they're like these Robinhood, evangelical people just, you're the greatest thing ever. We got to go. Well, look at those numbers. I mean, these numbers don't lie. There's some significant benefit for these firms to be doing what they're doing. And, I don't know the final outcome of all this. I think what we'll ultimately end up seeing is either some rules on payment for order flow, but personally, I would love to see it go away. It'd be great, because if it went away, all of a sudden there'd be a changing of the guards in the financial space. So there was a couple questions come here. Schwab did pretty well for us. Well, yeah, exactly. And again, if I had to choose between Schwab and Robinhood, this is a no-brainer. Schwab, I think, is a company that has integrity. I think that there is definitely some good people there. It's just, they're getting paid for it. And I'm one that says, let's do it ourselves. Let's put our financial future in our hands and take control of that. If it's not comfortable for you to do that, then have a financial advisor. But there you go. Gamification of trading is a complaint against Robinhood. Yeah. Again, it goes back to, it's free. And a lot of times people feel free is to their advantage. Again, if it's free, you're paying for it, and this payment, the what you're indirectly paying is the slippage that you're going to incur. You're not going to get the prices that you want. Most likely, you'll be paying more. Do you know what the miscellaneous fees are in Thinkorswim, which are charged on top of commissions and fees? I'm told SEC fee. Yes. So, God, it's been a long time since I've gone through these fees. There is an SEC fee. Sometimes there used to be a cancellation fee, because remember I told you back in the late 90s I was doing 550 trades a day, which is insane. But a lot of times it was just I was practicing. I'd hit these keys and hit cancel, hit the keys, cancel, and I was just posting orders and canceling, and I'd probably do 2,000 of those a day. I was supposed to pay 25 cents for every time I canceled an order, and a lot of times they bundle these fees, these costs, in my commission cost. So yes, you are. There is an SEC fee, there is the exchange fees, but they're really small, but they do add up. Exactly, Lori. I agree. Nothing in life is free, and the sooner we realize that, we can take a step back and look at. All right, Robinhood is free. If it's nothing in life is free, then where are those costs coming? And we can figure that out pretty quick. Yeah. I know. Good to see you, Brendan. I started the process, Brendan. Someone should be contacting you about the instructor training. Yeah, Margaret, 500. Crazy. I guess I'm not proud of it, but it's just something that I did. I was caught up in the day trading craze back in the late 90s, and that's what a lot of us were doing. It was just massive trading executions. 500 trades a day was just it's crazy. My average, guys, the most I did in one day was 880 trades in one day. And the funny thing is I sat next to a guy, I want to say he did 3,000 trades in a day. One individual, a 24-year-old kid, man. It was nuts. Anyway, it's not about me and my trading. So I think there's opportunity. I'm actually I'm debating. I'm debating on going out to Robinhood and buying maybe some leaps, buying some puts on this thing for the next 6-8 months. I think the Ginsler is going to try to pass this through and stop payment for order flow, and then we'll completely shake up this part of the market. And Robinhood, if they pass this sale of order flow thing, Robinhood's going to be down in $10 range. $10 probably. Does anyone know what the miscellaneous fees on my phone bill? They always get you, man. It's always fees somewhere, right? The issue with Schwab and Fidelity and others is they win whether the market is up, down, or sideways. Correct, right? The sale of order flow, that's just no matter where the markets are going, they're going to win on that one. All right, so that's my take on payment of order flow. Again, I want to thank Chris for bringing that question up, because I have heard people saying that it's going to destroy the financial markets. I disagree. Markets are resilient. We'll just evolve. And you know what? E-Trade, Robinhood, Schwab, Webull, TradeStation, Ally Financial, Ameritrade, they will all evolve. They'll adapt and find some other business model that works. Some may disappear. I don't think Robinhood will disappear altogether. You got too many people using it. But could it? Yeah, it could disappear. And it wouldn't be far-fetched thought to think that if payment for order flow rules came into place, that they would disappear. But I think other ones like E-Trade, Ameritrade, they've got too many other business ventures going on. I think that they can save themselves or just start. Hey, we're going to charge commissions again. There you go. Make it easy. Cool. If you guys get any questions about order flow, let me know. I mean, I know there was some people were asking what was order flow, what it is. It's basically the selling of your personal information, the selling of your orders going to the market, and it's just the nature of the beast in the financial markets. All right, I've got a ton of other questions. Yep, they'll bury the fees in something else, without question. No way, no doubt about it. All right, this one's interesting. So Kathy Wood has been very public. She's been selling tremendous amounts of Tesla. It's still her largest holding in her portfolio. For those who don't know who Kathy Wood is, she runs the ARK fund. It's a huge tech fund. It's been one of the darling securities out there. And she has been actively selling Tesla. And here is the ARK ETF, just so you guys can see it. I'll zoom out a little bit. It's been rather flat, right? Hasn't been as epic as it was back in early 2020 when we bottomed out in the market. Of course, everything looks like this now. So it's looking still okay, but it's rather sideways. Now I'm going to get these moving averages off here just so we can kind of paint the picture, because the question came in from Chris, which was, I was debating on buying puts on Tesla. I was wondering what your chart analysis would be on that. So I bring this up because this is one of her biggest supporters, or one of Tesla's biggest supporters, is Kathy Wood and ARK. And of course, there's a lot of people out there who are loving Tesla and think it's the greatest thing in the world. I'm starting to change my tune. I like some things that Tesla is doing. I love the eccentricism of Elon Musk, that's for sure. But let's look at Tesla, since Kathy is selling it. Right now, you guys know, you guys have been here long enough. Those who are regulars know what I'd be telling you to do on this chart. If this was my account, you have two choices, in my opinion. You basically set a trailing stop if you're in it because the trend has been gorgeous since mid-May, or you wait for the breakout above this most recent high. We are forming a nice uptrend here. It looks like a almost like a cup and handle. It's just you could call it an ascending triangle if you want it, whatever. It's gaining strength and looking stronger and stronger. I'll move this line down here. To me, you've got a line right around, it looks to be about 780. At 780, you've got the peak. It's that peak price that it hit on the 14th of April, which actually closed this gap, which started on the 19th of February. So you should see more strength building. I personally, Chris, I think that it's real risky to take a shot at shorting it. Now, granted, if you do short near the 780 or buy some puts at 780, you better have a stop loss just above this. Maybe your stop loss is like 795 or something maybe slightly higher. But this looks strong. Forget what Cathie Wood's doing. It's getting stronger and stronger and stronger. So hard to argue this trend. I mean, it's gone from a low of 540. It's currently trading at 757. The trend is your friend to the bend at the end, and right now it still looks strong. So it's not the best short in the world, Chris. The trend is up, in my opinion, and you would be going counter trend, but you certainly would be buying at an area of supply. But Big Eb says exactly that I would have. Don't buy puts on Tesla unless tight stops. It's a risky move. And as long as you know that, it's risky, fine. Go ahead and take a chance. But you got to have a stop loss in place, because if that thing breaks, you could see it rip to all-time highs. As crazy as that seems, you could see that happen. No problem, Lisa. Good to see you. What else was there? Margaret, do you own an electric car or bike? I do not own an electric car, although I did go drive a Tesla when I was up in Northern California, and I loved it, man. The acceleration of that Tesla is just unbelievable. Just beautiful, nice, easy one. So I do have electric bikes, and I love them. They're awesome. I am a huge, huge fan of electric bicycles. I live in Southern California, very close to the beach, so it's a little easier for me on bikes. I love it. All right, what else do we have here? Cathie Wood is selling Tesla because the stock goes up. It takes up more than 10. And that's the thing. She had too much of it in her portfolio. So she still owns a ton of Tesla. I think she's doing the right thing. She's just diversifying her risk, right? When you get that heavy, it's a risk for your portfolio. I agree. I don't know if Tesla's the future, but I definitely think Tesla is the lead dog for the whole automotive thing, electricity for the future. I love Elon Musk's visionary aspects and the fact that he keeps pushing these things. So, I got to put myself in the bullish camp on Tesla, especially when you look at this price chart. Even though it looks like it's coming into supply, still not having the guts to do it. But some of you might. Cathie Wood just sold 120. Yes, 28 million of Tesla stock, but still largest holding in ARK. Yes, exactly. You're right. Yep. So I thought about that as well. I thought, if she's selling it, it almost sounds bad, but it's not that. It's just because she has so much of it, she needs to lighten up her portfolio positions. Simple. I mean, it's almost like portfolio rebalancing, right? The more you get your portfolio too heavy into one position, you start to increase your amount of risk to that one security. And let's face it, Tesla is very volatile and risky. Anything can happen out there, even though a lot of people are very bullish on it. Chowsky says that sell-off on AMC came out of nowhere. Oh, not really. It's AMC, I wouldn't say came out of nowhere. You talking this most recent one? Nah, I wouldn't say it came out of nowhere. Still holding and waiting to see what tomorrow brings. What do you think? I think you're crazy for holding AMC personally, Chowsky. I think it's just not worth the risk involved. If anything, if I had to pick 99 out of 100 times on AMC, regardless of where the price is, I would be going short. Look at the price of AMC, and this is why you have to put it in perspective, right? This goes all the way back. Let's go into monthly. Oops, sorry, I'm not showing you the chart. Here's a weekly, right? This goes all the way back into 2015 when life was good. 2016, 2017, life was good. No pandemic, markets are doing good, markets rallying, we're going out. I was going to softball games and playing softballs and bar hopping and doing all kinds of crazy things that normal human beings were doing. And then all of a sudden, bam, COVID hits. And then AMC drifts down a little bit, which is rightfully so because everything was shut. So you're down to $1.71. And then all of a sudden this thing jumps to 72, which is the highest price it's seen in its history. There's no way that you can logically justify to me a $46 price point on AMC right now. You're telling me that things are better today than they were back when we had no restrictions here in 2015, 16? I just don't see it. And maybe I'm blind to something. Maybe I just don't quite get it. But to say that a $46 price target for AMC is a good value and we should be going long seems crazy to me when the price wasn't even near that in its heyday, in the day when it was doing the best it could do, and then it's been shut and all of a sudden this thing is at all-time highs. I know the short squeeze talk. It's okay. More people will continue to short this until they get back on track. So technically, you could make the argument, and this is for Chowsky, you could make the argument that we've been in an uptrend since August, right? So, where do you end up drawing that line? I wouldn't say the sell-off came out of nowhere. Remember, you've got a lot of big people wanting to short this stock. They were short this stock back here. They were short this stock back at $10, $8, $5. They were short this stock back at $3, and then they got short squeezed. So if you were short at $3, you think you're going to like coming back in and shorting it at 45 or 50 or 60? Heck yeah, you are. Heck yeah, you are. So I'd be careful. I think that you're going to get more shorting pressure pushing this down. And not to sound like a condescending jerk, but if you look at the markets, who is the talk track on why AMC is so good or why GME is so good? Those people are the Reddits. The Robinhood traders are going, let's do a short squeeze. And the reason they think this works is because they caught the institutions off guard with a collective run, collaborating on a short squeeze event. That's to me over and done with. I'm pretty sure that if this thing starts to have another big pop up, you're going to get Citadel derivatives and all these other ones come in and short the hell out of these things and continue to push it down. So the bag holder is going to be those Robinhood guys. So I'd be really careful with this one, Chowsky. I just don't see the legs. I don't see a reason, and I'm all ears. I don't mean to sound like a total jerk, but I am a jerk, but not a total jerk. But if you have an argument for it, is to say, hey, this is why it's going to continue to rock up, let me know. I don't see it. I don't see the demand for movie theaters anywhere near what it was back in 2015. Granted, they may have taken some of this money on this huge rally up here and paid off debt, which improves their balance sheets. Okay, that's an argument. But are theaters going to be back to their heyday where they just lines out the door to see the new Star Wars? I don't know. Not that I believe the analysts, but their high-end forecast is $16 for AMC. Yeah, let's just put a line at 16 on this chart, all right? Just for giggles. So I'll put a horizontal line right at 16, and then look historically. I'm okay with 16. 16 doesn't seem out of line, right? It seems to be out of line here to be up at 46, but $16, okay, that seems kind of in tune with historical. Yeah, it's definitely higher than its lows in end of 2020, but paying, I think anything above 16 would be nuts. Peter, hey, well, we have the Eagle of the Week tomorrow. I forgot that you guys agreed on. We didn't agree on anything, but the Eagle of the Week. I need more people to give me some Eagle of the Week nominations. Was it the Eagle of the Week? I never got the graphic done, but I'll see if I can come up with an Eagle. Eagle of the Week. Yes, that was pretty fun. We had the Donkey of the Day, but I rarely do those because sometimes I feel bad calling out people like that. But all right. So let's see. What time is it? 33 after. Let's go a couple more questions here. This one came in. This is a quick and easy one. Lee asked me, he says, yesterday you talked about algorithmic trading. So this was actually 2 days ago. Algorithmic trading. Do you know what kind? The two that I were in were some moving average technical strategy, right? Which I probably could have implemented myself. I don't remember. It was so long ago, but I'll never do them again. And again, most of these algorithmic trading things that I've mentioned. Oh, thanks, Chris. Yeah, don't forget that like button, right? There you go. Most of these algorithmic tradings are just a combination of very basic indicators, moving average, volume, MACD, stochastics, RSI, CCI, something like that. They combine them up and it just gives them buy and sell signals. They automate that, turn it on, and there it goes. But the commissions start to eat away at that one. And a lot of trades are going to be made depending on which system you use. So that was it, Lee. Nothing really overly dramatic. I picked the one that, the two that I picked, actually, they had the best results. They were like the best performers out there. All right, a couple other things here. Evelyn, I have a bad losing trade right now on Qualcomm. Analysis or help would be appreciated. Well, I guess, Evelyn, the same thing I'll tell you is, what was your plan on Qualcomm? Let's look at the chart of QCOM. I can see why. You actually have a fairly negative pattern going right now. Now, it doesn't look great. You really have this big trading range going between 125 and 150, but you're starting to break some lows here. I mean, you're coming into these little tails that go back into July and August. Those are your turning points. If that doesn't hold, I think Qualcomm's going to drift down. So my question for you is, if you said you're in a losing trade, where's your stop loss, right? Everybody, regardless of what it is, you have to have a point where you say you're going to get out and lick your wounds and move on. Unfortunately, I've been victim of this, so I can say these things, but you could stay in this one thinking it's the greatest company ever, and for whatever reason, doesn't have to make sense at all, Qualcomm could keep dropping, right? Maybe you're long from 144, next thing you know, it's at 100. Well, now you're down $44 per share. Then it keeps dropping, it's at 50. Well, now you're down, $94 per share. And it keeps dropping, It keeps on dropping like this. Eventually, you're going to be broke or margin called out or stopped or just taken out of altogether. So you got to have a point where you put a line in there and say, this is it. I'm willing to lose this much, and it needs to be a number that you're comfortable with. So, Evelyn, I'm sorry to say it, but I don't like the chart of Qualcomm right now. It's starting to make lower highs, lower lows, and it's been having some aggressive, strong moves to the south side. So, to me, it looks like this recent downtrend that's formed over the last month is probably going to continue. Big Eb says, can you comment on Sam Evans? I can't really comment on Sam Evans because it's his business, but let's just say, Big Eb says his partner Flake. Let's just say flaked is probably not the right word. You have certain people that, what's the right word, are just scum. You guys know the guy out of Chicago who I think is just an absolute scumbag, and I think he did a similar thing for OTA. I think that he is the primary reason why OTA received the attention from regulators that it did for certain policies that he put in place. So that person falls into the scumbag category, in my opinion. Unfortunately, I think Sam got some partners that weren't really on the up and up. It's sad because Sam's a great guy. Sam Evans. Let's be very clear here on which Sam I'm talking about. Sam Evans is a good guy, and I'm hoping to bring him on the show. Who knows if he does something else, but I'm pretty sure he's maybe gun shy from that because he was really putting his heart and soul into his school and everything. So it's unfortunate this stuff happens. Let's see, another one. A couple quick questions on charts. Will he teach again? Probably. I mean, Sam and I are kind of cut from the same cloth. We love the education side of it, right? There's a certain joy we get to teaching and watching people's eyes light up or get it, and then even better, down the road. I mean, one of my favorite things is, as an instructor, you get emails from students down the road, or you meet them at a trade show or something, and they'll be like, hey, you know what? I've been trading for the last, X amount of time, and I've been doing great, and I did this and this all because of trading. I want to thank you for that. It's like, that means a lot because the names or the education I'm giving is a result of experience, blood, sweat, and tears on my end. So it cost me a lot of money. So I like giving back. I mean, one of my favorites, I taught at an Italian university, and actually one of the guys ended up getting a job at Citadel, of all places, making huge money, right? He didn't start making huge money, but because of the skill set that I taught him, direct access trading and technical analysis, risk management, all that stuff, he managed to, A, get himself in the door at Citadel, but B, worked his way up to a very, very, very nice salary position. And funny, one time I was out in Chicago, it took me out to dinner, and it was just nice to get that kind of recognition that you've helped change and influence someone's life for the positive. So that's one of the things we love to do, and Sam Evans is definitely in that category. Let's see. Mr. Institutional Order Flow. Yeah, that's it. Yeah. Mr. Institutional, Mr. Order Taker, who basically stood on the sidelines and watched real people trade. All right, let's go look at thoughts on Texas Instruments. TXN, would you short now for David? There's a few securities I've never traded. I've never traded Texas Instruments. Not that there's anything wrong with it. I just never traded it. Ooh, wow. Oh, man. I'm going to let you guys handle this one before I dive in. You look at this price chart here. This is the daily. Let's look at the weekly just to get the bigger picture. How many of you, yes or no, think short Texas Instruments right now on a weekly? Right? Texas Instruments, would you short it? I got that price chart up there for you. I mean, that is a thing of beauty from $90 right now smacking its head. Let's just round it up to 200. It's really at 197 is that smacking the head on it. But how many of you would just feel comfortable shorting this one right now? I mean, it certainly could go down, right? Come on, I just see some chat flow through here. You guys are good. I got an active group today. So Les says no in bold letters. Who else we got? I'm sure we got a few of you out there. I'm looking at this one, and you got a couple different ways that you can perceive this. for me, I think it's just way too risky to take the short approach. And one easy thing that you guys have seen me do quite a bit is you just put a line across and you establish a zone, right? And literally, that's those two lines right there. So between 181.70 and 197.54 is this range. And of course, I'll bring on my favorite item, the yellow box. I need some dramatic music when I say that. We are in the midst of this yellow box right now. So if anything, I wouldn't do anything inside this yellow box. Shorting it is just too risky for me, right? I see most of you guys saying no. Nope. Believing direction says ascending triangle. Absolutely. It just feels like it's building strength. Peter says wait till the pullback. Cool. No supply zone. No from you guys. Cool. Yeah, I'm with you. I wouldn't short this one right now. So David, if you've got a peer group out here, it looks like about 15 people all saying no. And I'm not saying you don't just flat out don't short it, just not right now. So how about we put rules around this? And I would say if you drop below 181.70, then short it. And you're probably thinking, well, I'm leaving $10 on the table or $16 on the table. Yeah, I'm okay with leaving money on the table. Why? Because I want it to prove that it's weak. This thing's been looking really strong. I mean, Texas Instruments, really? Last thing I remember Texas Instruments is I had a calculator in high school, but I'm sure they're into different technology now. I know they're doing chips and things for vehicles, etc. But I would wait for it to break down below 181.70. If it dropped a little bit from here and got in the middle of the range, maybe do some spread trades on it. Or you wait for the breakout because it looks like an ascending triangle. You could call it a bullish flag if you want. It's just consolidation after a very strong move. This makes me nervous. If I wouldn't short it. And if you do short it, that's okay. Just have a stop loss in place. To short something yeah, exactly, Peter. To short something bull strong, especially this strong. I mean, this one looks really strong. You need it to prove it. So you're getting a resounding set of no's on that one, David. If you did short it, just, again, make sure you have a stop loss because this bad boy, for whatever reason, I don't know, it's just looking really, really, really strong. If you neglect this week's candle, it was forming a megaphone pattern and it broke out of it. Well, I think it's the opposite of megaphone. It's actually called a pennant. So I'll draw some lines on here for you, Les, just so we get that done. So a pennant is this shape. Bear with me as I drew my wonderful... That's a pennant formation. So you're saying if you take out this week's candle, right? I think that's what you're talking about, Les. You could even go further back and bring it to here and bring it to there. Wherever you want, it's still the same basic. A megaphone pattern would be if these lines look like this. They call it a broadening formation, a megaphone pattern. That it would look like that. Cool. Okay, cool. No, just want to make sure we get the thing right. John DiNardo, good comment. He says sell puts. Why not? Right? Why not? You could sell puts at 181. I'm sure we could get some decent premium at 181. So why not? I mean, this thing looks so strong right now. So 181. You're not going to, actually, you might not get a lot of premium because it looks so bullish. So who's looking to buy puts? But I would probably be okay buying the 181s. And if it exercise, and then dump them. But yeah, you could sell puts as well. Absolutely. All right, what time we got? I'm going to make sure oh boy. Let's see. So Mike had a few different things. This is a long question. So Mike, I think you're here with us today. So bear with me as I go to read through this one. It has to do with scans and filters. He says, I'm interested in knowing if there's a way to use the scanner and determine if an average is rising or falling from the previous day. On TradeStation, I took a one-day moving average and changed it to 50 days and saved it. Now I want to use it to determine basically if today's value is greater than previous day. I'm looking for stocks with a close above the 50-day moving average if the 50-day is rising. Okay, so do I have trades? I think I have TradeStation up. So I'll do a couple different things here. Let's go. I'll make this full screen. So this is basically my utilities, my XLU, right? And I'm going to show you the chart. There's my utilities and TradeStation. So one thing you can do, and can be done on a lot of different platforms, is I'm just going to go and put in insert analysis technique. And I'm just going to go down to moving average if it pops up. There we go. So we'll type in M for moving average. And you could do a variety of different things, but I'll just do a moving average one line. And I will add that in. So right now, we can't essentially do what you want to do all in one. Mike. You can't do it all in one with the stock tools. If you know their programming language, which is called easy language, you could do it. You can do anything with easy language. So right now, you're just kind of wanting to look and see, is there a difference between these two? So it's a manual process. So you got to modify this one. So we go Format, Analysis, Technique, and then you want it on the 50. This will tell you, well, it shows the price relative to the last price. So most of these are going to be above its moving average. But I didn't see one which shows crossovers. Now what I would do is I would take something like this, Insert Analysis Technique, and I would do a 2-line crossover. And I think you can actually do it moving average crossover and add that one in. Okay, so now you get a series of different numbers. And it's going to tell you, when things are crossing above another one or not. Unfortunately, it doesn't really give you alerts as far as is this one crossing this at this point, but you can go in here and change all of these settings, right? Change all the different parameters for your moving averages. So right here, you're looking for, let's just say you got your 50, and then if you wanted to just show current price, you could literally do a 51. And just that, all that would do is just show you which one is currently higher. And like with %B, I like it because it shows me those crossovers. So right now I'm getting no results. It's not showing me anything on the crossover. So obviously I input that one wrong. I'd have to dig deeper, Mike, to get that one. What I've done in the past is simply held these two side by side. If I was looking for something that was above a moving average, right? Now you can go in here with easy language and code it to say, take the moving average minus last price and show me a difference. And that would give you if something is above or below it, right? But not if it's in an uptrend. Just simply if it's above or below the moving average. Even that you'd have to code in yourself in TradeStation. But if you can find someone who does easy language, I'll tell you there's a lot of people online who are doing easy language stuff. There's a lot of communities out there and groups. Reach out to those guys. There's probably something that's already created that does what you want, and you might be able to get it for free. A lot of times they sell the programs and code that you plug in. Find it for free, but I don't mess around with the easy language because if you know the truth, it's not easy. Yeah, no problem, Mike. But I would definitely say check out and type in easy language in Google, and you'll find some easy language groups. Maybe you just pay attention to those guys for a while and say, hey, does anybody know how to create this? Somebody will go out there and create it for you. They're usually pretty excited to do that type of stuff. Okay, let's see. What do we have cooking? So I'm going to real quickly tell you your economic calendar for tomorrow. I'm actually, I was interested to see the retail sales numbers that came out today. You guys saw that. They were expecting a decline of 0.7%. We came out at a positive 7%. So that was great, which maybe is why we saw the second half of the day rally up, which I'll look here in just a second for the markets. As far as tomorrow's activity, there is announcements tomorrow, but usually it's so light on Fridays. There's nothing going on for the U.S. that's of concern. For the euro, you do have CPI number, and that is pretty much it. And earnings calendar is just nothing but dead. So there's nothing going on with regards to earnings. So let me real quickly run through some of the top markets here. I'm going to have to do that in the other platform because TradeStation cut me off, and I'm going to try to use a different platform. It was great seeing the NASDAQ rally. Unfortunately, I'm still short on the NASDAQ. So here's let's say 15-minute of the NASDAQ. Look at that sell-off. It was looking really aggressively weak, and then bam, we've seen really the same thing the last 2 days. Has been that opening 30 minutes has been ugly, really aggressively to the south side, and then all of a sudden, just nothing but up the remainder of the day. The last 2 sessions in a row, which is definitely a vote of confidence for anybody who's bullish on the Qs. If I get a strong close tomorrow, I might actually close out my my put options, and right now I'm up a little bit, not a ton, but a little bit, enough to lock in some profit on that one. I was hoping for a much bigger winner, but I may have to get out of it if this continues to do what it's doing. So that was what happened in the NASDAQ. That was your best performer today, just barely eking out a positive gain. And you see that long bottoming tail on it today. Crude oil was your second finisher, and I think I saw somebody else here that said crude oil, moving or mooning. Well, certainly it's looking bullish right now. I will still hold my stance that I am bearish on it because of what's going on in this blue triangle, or this blue square. I look at something like this area right here, and I think you're definitely going to be coming into some supply on this one. That's obviously an area of challenge, and the more that it breaks through these overhead supply levels, the less confident I am in shorting, right? This blue box really shows me a counter trend pullback, and I was expecting this to continue to drift down. It didn't. You know, we've had 4 days of really bullish move in crude oil. I did not expect that. I certainly expected to stall right around 74. Where it goes from there, don't know. I mean, right now the trend is certainly indicating more strength, but we'll have to wait and see what the final output or final decision is on this with regards to buyers and sellers from crude oil. But to me, stalling at 74 and then see how far that pullback comes down. Hopefully we can get down below 68 and re-challenge these lows at 61. Mike says, been programming for 40 years and don't want to do it anymore. No problem. Hey, I tell you, if you are a 40-year programmer, start looking at blockchain stuff. Look at smart contracts. I mean, that's some easy money out there. Thoughts on the repeat of mid-month pullback that has been happening the last several months? I don't necessarily have a view on a mid-month pullback, but we can go out here and let's go. I'll do daily. Let me scroll out just a couple of months here. I mean, are we seeing necessarily a mid-month pullback? So you definitely had one in July. You definitely had one in August. You know, you're maybe starting to see one here in September. You know, could that be the norm? Well, it didn't really happen in May, June. It did in July. So it's not always there, but, you know, maybe we get one. I mean, I want to pull back because obviously I've got a short bias and I'm positioned for some short moves right now. So let's bring it on. But I don't know if the last 2 months is really an indicator that we're going to have a significant pullback. But it is something to look at, John, right? They say, you know, the devil's in the details. Well, maybe. Okay, I think that's pretty much going to do it for me for today. Yeah, we're now at the end of the time. Wow, that was a quick hour. All right, tomorrow I will see if I can find an eagle of the day, a donkey of the day. I will have a nice cold frosty beverage as well. We had some decent moves this week. I'm hoping we get a nice exclamation point on it this weekend. I'd love to see a nice big sell-off going into the close, but we'll have to wait and see how that pans out. For those of you that enjoyed today's show and those who are new, do me a favor. You can email me at TraderMerlin@gmail.com if you have any questions, comments, feedbacks, or topics for shows. I'd love that as well. And if you like the show, subscribe, hit that little thumbs up button. Thanks, everybody. I will see you all on tomorrow's show. Take care.